All right, y'all, back to work. Boy, fantastic job today. Lots of winning trades from last night's video. Hope you guys got some money out of that yourself as well today. Now, boy, markets are grinding down into non-farm payrolls coming tomorrow. There are lots of important clues on the charts right now, but this one specific clue on the tick charts kind of stands out to me tonight. And it's telling me where I think the easy money, the biggest winning trades are setting up for tomorrow. We'll cover that important clue, obviously. We'll cover my favorite entries, my exits. We'll cover some variations. And more importantly, I'll give you guys a roadmap, a game plan, so you can make some money tomorrow morning as well. So charts are ready. Enough of the intro. We got one more day left. Boy, it's been such a fun week to be a trader this week. Let's dive in and go find some winning trades to finish up the week tomorrow. S&P SPY's ready to go tonight. Nasdaq triple Qs are all ready. I got four important clues on the charts right now that are telling me where I think the winning trades are waiting for tomorrow. One of those four clues, it's right here on the hourly time frame. It's pretty easy to see right now. The bears are in full control, momentum on the hourly S&P SPY, full control for the bears here. Nasdaq triple Qs. I like to use these hourly charts as an overall directional filter, a bigger picture look. They're not going to help us time the entries, though. I've got three more important clues that will help us kind of bring this all together and time some winning entries for tomorrow. The second clue is over on the calendar. Tomorrow's not your average Friday, right? Tomorrow's the first Friday of the month of April, which means we've got non-farm payrolls tomorrow morning. I would expect there to be some volatility around that number tomorrow morning. We'll keep on listening in for more tariff talk and back and forth right now. You know that's going to keep coming tomorrow as well. And don't forget, we got Jay Powell. I'm sure Jay Powell will have something to say about the tariff announcement earlier on this week. So I'll be definitely grabbing my popcorn and watching him talk tomorrow around 11:30. But definitely be aware of that employment number tomorrow. And as always, right now, it is very fluid, a very dynamic situation with tariff talk right now. So keep your eyes on the news headlines. Back to our charts, though. I got two more clues. We talked about earlier. We got a strong move down. Bears have control on the hourly time frames right now. That gives us direction. But again, it's not going to give us entry timing. There are two, I think the most important clues right now are here now on the tick charts right now. One clue, we are grinding down. Anytime we see a market separate and grind below that moving average, boy, oh boy, that's a lot of momentum. That creates a very heavy market right now. When I see a market grind down like we're seeing right now, there's a very good chance we're going to go up and then right back down to retest that low. That's a big clue. But I think what might be a more important clue is this measured move. Now, remember, one of the scenarios we talked about in last night's video was that trading range environment, right? Whenever we see a breakout of a trading range, we like to use the breakout leg as a measuring leg, and that gives us this measured move. Now, why would that be important? Well, because usually after a breakout pullback completes like this and we complete a measured move, we usually begin to see some trading ranges down here. Now, combine that with non-farm payrolls and J-Pow tomorrow, I would imagine a trading range down here is a very likely scenario. Now, ranges give us two ways to make money. I want to talk about that first because that's very likely for tomorrow. But you know, I have no crystal ball. We may not get a range tomorrow. I also talk about a bit later on in the video on the Nasdaq, we'll talk about if we don't get that range tomorrow because there's a few more trade scenarios I want to cover. So if you like making money, I'll definitely make sure you watch all the way to the end. Let's talk first though about a trading range. There are two ways, two kind of basic strategies look for when it comes to a range market. The most important thing you want to remember about ranges is they like to rotate. So for example, we had that range that we had overnight last night, right? The amount below, the amount above, the amount above, the amount below. No surprise, right? They got that beautiful two-tribe bounce. We talked about this last night on the video. So it's important to remember that ranges like to rotate like that. And these can be very lucrative if you know how to trade them. So for example, one way I would love to trade this right now is if we get this thing popping up, I would love to take this 21 EMA. This yellow line right here is a 21 EMA. I would love to use the 21 EMA. And just like up here, we go up, the buyers once, the buyers twice, and we collapse back down. I would love to use that trading range as a magnet. Go up, buyers once, buyers twice, bull trap. Now remember, if I can trap in some buyers up here, their stops now going to fuel that move back down again. The market's going to want to rotate all the way back down to complete that pendulum swing. So as we start rolling lower, I'd like to add to that position. Now remember, when we add to our winners, it's all about that separation away from the moving average, lower low in price, right above that high. We call these add-on trades in our trade room. So one of the two scenarios I'm looking for tomorrow is going to be that range. And again, pop it up, get up into resistance, trap the bulls in. I like to use 2 tries. Remember, lower lows on that 2 try, a bull trap up here, squeeze those buyers in, just as we saw late this morning, early afternoon, right? Bull trap and then add on. And remember, if there's one scenario where you have to leave a runner, it's always a range play. We're not going to get out at the low of day right there, not in the range. Leave that runner all the way down. Now, just one variation of this. Sometimes, unfortunately, we don't get that bull trap up there. Every once in a while, we'll get a range here, and everyone is so bearish, it'll pop up. We don't get the 1 try, 2 try. It simply just gets whacked and runs back down again. If that happens, my goal will be is to get in above these prior swings. My favorite entry on this is to find a channel off the lows, bring it up around the high like that, and get short around that high like that. Not ideal. I'd like to go up, trap the bulls in and back down again, but a backup on that, if there's so many bears up here, it just gets whacked back down again. It'll run up, get whacked back down, start grinding down like that. Easy. Find that channel below, up around that high, find one of those prior swings and get that first test. That first test is the best test. And again, imagine a range in there. Imagine the amount above, the amount below. This is why we love ranges so much, right? They can leave those huge, huge targets on the other side of that range. Now, one more variation on this. And remember, I have no crystal ball. I don't know what the market's going to do tomorrow. All I know is if I see a trading range, I'm going to trade that rotation. Now, another variation of this. Every once in a while, we get some really big pop up. Tomorrow's non-farm Friday. There's a good chance here we might get the pop up. We might get that bull trap up here, trap those bulls in, run back to that trading range. I always try to take some profit off at the edges of those ranges because every once in a while, the strength of that move up will give the buyers enough of momentum there to punch it back up and retest the high. Now remember, this is a very bearish market right now on the hourly. Anybody who buys that breakout pullback, they'll be taking their profits right back at this high. This is a horrible spot to be a buyer in an overall bear market like this. So use this, we call these retest trades, right? Use this retest as a second bite at the apple. Same thing, 1 try, 2 try, trap those bulls in, run back lower. And remember, when you're in that winning trade, don't get comfortable. Keep that foot on the gas pedal and keep adding to that winner. Remember, the retest trades are oftentimes uncomfortable. They're a bit scary. It feels like things are going wrong. But I'll tell you right now, the scary trades are oftentimes the biggest winning trades. Remember that hourly chart. We're still bearish overall. I love that retest trade. Bull trap. Add on, let that sucker run. Now, one more. I mentioned earlier, there are 2 ways to trade a range. I want to talk about now, let's talk about, and again, we'll cover the Nasdaq in a moment for that second scenario for tomorrow. I want to talk about what if we go into a range and go lower? There's actually 2 ways, and there could be some traps down there. I want to cover that in a moment. But before we do that though, let's slow down for 2 seconds because I know most of you guys watching right now, you know these patterns already. You're making money with traps and add-ons. You know why we love range rotations so much in our trade room. But if you're watching for the first time right now, This might be a brand new language for you, a brand new strategy. Don't you worry though. I teach this entire system. In fact, I have a ton of trade examples of traps and failures and add-ons. Guys, I want to help you time better entries with this stuff. This stuff works so well. I'm gonna put a link up top here for you. Upper right-hand corner, grab that link that popped up there and take that free trading course, because the strategy I teach in that video course will teach you a simple trick we use in our members trade room that tells us exactly where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry setups so you can time better entries, make a lot more consistent money. Guys, the markets are way too good right now not to be banking profits every day. So if you're still missing the best entries, if you've lost your confidence in your indicators or your current strategy, hit that link that popped up there. Watch that free trading course. It will change the way you look at the financial markets. Everyone loves all the trade examples I include in that short video series. The best part is it is 110% free for you. Also, to keep in mind, guys, I'm going to put all the important links you'll need below the video, the description. Start first on the free video class. Most folks start making money all on their own from that free video course. So start there first. Then don't forget, we trade together every morning, 8 o'clock Eastern time. I'll put trade room membership links down there. And if you're on Twitter X, I post a ton of videos and charts and mindset stuff throughout the day. If you're on Twitter X, give me a follow. Again, all the details you'll need to learn more and hopefully earn a lot more. I'll link the full description below this video. Okay, so now the new folks know where to find more information and learn this roadmap. Where was I? Okay, so we're talking range plays right here. And again, on the Nasdaq, I'm going to talk about if we don't get a range tomorrow. So we'll cover more of that in a moment. We covered earlier going up, right, and back down again. I gave us some variations if we go higher. But now here's the big question now, right? Now here's the big question. What if we go sideways into news tomorrow and then we go lower? There could be some traps down here. So first of all, I talked about earlier when markets separate. If we start seeing a breakdown and we start seeing separation off that moving average, that tells me now to begin looking for a breakout pullback. Wait for that pop up, get above that 21 EMA, trap those bulls in. And remember, as I mentioned earlier, one of the most consistent things about range breakouts is the breakout leg can be used as a measuring leg. Guys, if you want to make more money, don't trade more often. Just hold your winners longer. And that's much easier when you learn these techniques to know where the market's trying to go. So the bull trap's easy. The add-on is easy. It's the same techniques I've talked about already so much. But the most important thing though now is now we know where to leave that runner. As always, take some piece off right at the low of day there. But again, measure that breakout leg. That's your measuring leg. Once we know how big the pullback is now we anchor it down. That's pretty simple, right? This does not need to be that complicated. Remember, the breakout leg is always the measuring leg. The most important thing I want, remember though, is we have to see that separation. That separation is so important because we are way down right now, right? So remember, this could easily happen tomorrow. We could easily start seeing a range here. We could easily see it run lower, and now we don't see separation. Now we pull back, the bears try once, we go higher, the bears try twice. Now, this is a crown reversal pattern. It's a higher high in price, I move right below that low. I like to go half size positions on these counter trend reversals. We know where that pattern's going. And remember, like I teach in the free video course, which by the way, grab the link below in the description, strong green candle, closing above the moving average. We don't pick tops and bottoms, guys. We wait to trap in the bears, right? Let the bears try twice and squeeze those stops. I do not want to buy this though as it's going higher. I want to be in a bit early before it makes that run up. Remember now, the amount below, the amount above. This is now where we take off our profit targets. And in situations like this, I will look for larger channels up here, right? Don't be afraid. I'm telling you right now, don't be afraid to cash that paycheck a little bit ahead of that pendulum swing, because you know who's up there. Bears up in those pendulum swing eyes. And so what do we do now? Now, as we go higher, now this is where trading gets fun, because you know that as we rotate off that low, this is going to feel very bullish. This is, remember, my biggest winning trades in almost 20 years of trading. They're always the scariest, right? So if that voice in your head is saying, are you sure about this? Are you sure about this? You're probably doing it correct, all right? If you got that anxious feeling in your stomach, you're probably doing it the right way, right? Get comfortable being uncomfortable. This will feel very scary, but don't lose sight of the big picture. It's not a reversal. It's probably just a range rotation, amount below, amount above. And again, don't pick that top. I don't need divergence. I don't need to read tape. Just wait for the pullback. Once, twice, use that 21 EMA, squeeze, or not squeeze, right? But run those stops, trap those bulls in. And again, you know where this thing wants to go now. It wants to rotate back down again. I'm telling you, once you learn ranges, things get so much easier. The markets make so much more sense once you learn how ranges work. So I'm warning you right now, if we go into a range tomorrow, non-farm payrolls, J Powell 1130, be careful of that fake out breakout off of that low. And again, that buy off the low, I always go half size, quarter size. If you're new to this stuff, it might only be zero size, maybe a demo account or a simulated trade on that one, and then load the boat on the one rolling back down again. All right, that is the range play for tomorrow. We might get one of these trades, we might get all these trades tomorrow. Only time will tell. Now, what if we don't get a range, right? What if we're not lucky enough? Because really, the range is the easy way to make money. What if we're not lucky enough to get a range for tomorrow? Great question. Let's go grab the Nasdaq. Nasdaq's getting lonely over here. I know, NQ. I'm coming here with you, buddy. All right, let's do this here. On the Nasdaq right now, bears clearly have all momentum right now on the hourly time frame. Before we dive into tick charts though, if you're enjoying this video tonight, please help me grow this channel by hitting that like button and make sure you subscribe. I know we're all busy people these days. There are lots of things you can be doing right now. I appreciate you tuning in and watching my videos. So thank you so much for the likes, the shares, the subscribes, all the ongoing support. Now I promise I'm done begging for likes. Let's dive in and talk about the tick charts here right now. Remember, time charts, I like to use time charts, bigger picture stuff, but tick charts, they just make everything so much easier. All the time frames, by the way, upper left-hand corner there if you're watching for the first time right now. And again, that yellow line right there is the 21 EMA. Once again, on the Nasdaq, there's that range. It was one of the scenarios we talked about in last night's video. Amount below, the amount above. Up, 1, 2, back down again. Look at that beautiful add-on right there as it rolls. The amount above, the amount below. No surprise there. No surprise there. Trap the bears in. We got the bounce. We got the 1-to-1, but obvious, right? Obvious. No pop. And this thing is heavy, heavy, heavy. We mentioned earlier the size of that breakout leg, measuring leg. Okay, right? We covered earlier that trading range, right? We know the game plan now to trade that rotation back and forth with a possible range for tomorrow. But what if we don't see a range, right? What if we don't get it? Or what if we keep on grinding down? There's no reason why this market couldn't keep going lower here. So the key right now is you'll notice I'm connecting these lows here, right? I'm connecting the lows up around the highs, finding these channels. I'm going to keep on marking up these prior swings here, right? We'll keep on looking at those swings as we go higher. What I wanted to think about though right now is because we're so low right now, like over here, right? We go one leg, we go two leg. Think about two-legged pullbacks right now. Two-legged pullbacks are kind of where the sweet spot is right now in a market like this, unless we get a range, right? Unless we get a range. If we see a range tomorrow, we trade the range. All right. If we don't see a range though, we start looking for get back above that moving average, get that two-legged pullback, run up. Ideally, it'll be some level of resistance, some channel, right? Some prior swing, some level of resistance up there we can time this with. And again, once it pulls back here, once, twice, bull trap. And remember, the big difference between a range and a move like this is now the target now is back to that low. This is why we love ranges so much, because ranges rotate, right? On this one, though, the target now is back to that low. So again, it's going to be the bull trap. Now, one thing I always look for is take the size of that pullback and think about where the 50% level is, right? Think about where that halfway point is. That will give me now my risk reward being balanced, all right? My goal on these two-legged pullbacks is to always make sure when I'm getting in on my add-on, I want to try my best, not always, but the goal is I want that add-on. Again, think about the size of that pullback, split it right in half. Remember, filtering your trades based on risk-reward ratio. Professionals want to risk small to earn large. Think about that halfway point. Ideally, I want that add-on above that halfway point, because now my stop can go up there, my target back there. That makes sense, right? Okay, we're filtering based on risk reward. Just a side note there, right? On that add-on trade. Again, if it's a range, we don't have that problem. But in this scenario, two-legged pullback, it is a problem, right? Because we now know the retest of that low here. And then remember, anybody who sells short up here, where's their profit targets? Down here. This is not a great place to be a seller, okay? Which means a great place for another one of those crown reversal patterns, right? So as we pull back here now, bears try once, higher high, bears try twice. Now again, in a heavy market like this, lots of the fear of the unknown right now. I want to be a little more cautious on this long side trade. And again, it's going to be a higher high in price and move just below that low. A lot of trade examples of these inside that free course I mentioned earlier. So grab the link below the description of the video. And remember, right, the market now wants to go back up to that area right there, right? So as it rolls higher, that's where our targets are. And again, I mentioned earlier, these are half-size trades, right? Quarter size, you know what I mean? They're small, they're not full-size positions because again, we're going against the overall trend. Now, I mentioned earlier that sometimes we'll get a two-legged pullback. We don't get that two tries up there. What happens is there's so many bears up there, it gets whacked back down again. These are challenging on the emotions, but if you have the game plan for it, they're very easy. If it V-tops up there and begins to grind down like this, just draw a trend line off the lows, bring it up around the highs, find those prior swing highs. I'm telling you right now, the swing highs is where the money is, right? The swing highs, that's where the moolah is made right there most of the time, right? Nothing's guaranteed, right? But that's usually where, nice big red candle closing back below the 21 EMA, like I teach in the free trading course. And again, targets come off at that low, bear trap, right? Creme reversal off of that low. And again, I know it's scary sometimes, but we oftentimes will run up, pull back, retest, oftentimes up, bull trap, run lower, retest. I know this is scary. I know they're scary. But again, these retest trades are oftentimes the biggest winners you're going to take here. So let it go a little bit above that high, right? Let this thing go a little bit above that high and then wait for it to pull back. You can almost hear the market panic, right? As it floats lower here. 1, 2, buyers chasing after it. In a bull market, maybe. In a bear market with uncertainty with tariffs, no, right? No, right? So bull trap up the high, double top, right? Retest trade. We call these in our trade room. We love retest trades, and a lot of you guys love them as well. So retest trade, and again, I know it's tough at first, but when you get yourself in a winning trade, you take that 1-to-1, move that stop down, right? Don't let a green trade turn red against you, right? Lock up that profit, move that stop down, and then take another couple contracts, right? A quarter size position, an eighth position, right? Something small, and keep on adding to it as it makes its way back down to retest low. Once I learned how ranges work, and once I learned how to add to my winners, I'll tell you, boy, everything gets so much easier and trading becomes fun. Believe it or not, it becomes fun as well. All right, guys, that's the game plan for tomorrow. Let's keep the good times rolling. Now, don't forget, tomorrow morning, every morning, the place to be is in my trade room, 8 o'clock Eastern time. Guys, the easiest way to start making money in these markets is to learn and trade along every morning with us at the opening bell. Again, I'll put all the important links you'll need down below in the description of the video. Start first on the free video classes. Enjoy all the trade examples I include in that video course. Then come join us in the trade room and we'll do it together. In the meantime, guys, great job this week. Make some money for us tomorrow morning. Be well. Be nice to each other here. Have a great weekend. We'll see you guys tomorrow. And as always, be here next time. Adios, amigos. Bye for now.